with Amazon, he said, we needed the internet. Somebody else spent billions of dollars developing it, but it wouldn't have worked without the internet. He said we needed transportation. Somebody else had already built railroads and UPS and all of that sort of thing. And he said we needed payment systems. It's brilliant. I give him great credit for it.
You have talked extensively over the last several days, even the last several months, about how Jeff Bezos is the best business leader you think we have right now in the United States, about how Amazon is a brilliant company. And now you're talking about how it's one of 5 companies that take no capital to continue to build. How come you don't buy shares of Amazon?
Stupidity. I was impressed with Jeff early. I never thought he could pull off what he did. He's done it in 2 industries almost simultaneously that really don't have that much connection. I've never seen any person develop 2 really important industries at the same time and really be the operational guy in both. And he's done a good job with the Washington Post on the side, just not personally. But here you take cloud services. I mean, there was a Charlie Rose show on this that he did 3 or 4 months ago. He thought he would have 2 years of runway. He got 7 years. You do not want to give Jeff Bezos a 7-year head start
before the competitors jumped in
any
on cloud
economic
services.
race. So at the same time he's shaking up the whole retail world. He's also shaking up the IT world simultaneously, and I take my hat off to him.
But by not buying shares right now, it suggests that you think maybe they're too rich, or is it that you don't understand the company's valuation?
It's a big valuation. It's very hard when you thought about something at 1/10 the price to buy it. We do it occasionally, and you're talking now about getting multiples from the hundreds of billions. And but if you told me that you were going to shoot me at the end of 10 years if a short worked out better than a long, I mean, I would take the long side. I'm not buying any, these are powerful ideas with big potential, and he's executed.
Google those 2 guys who created that are 2 of the smartest young men in the whole country. And it's much more fun to be copied by people that smart than
we even think they were smarter than we thought they were last week.
Yeah, we now think they're a lot smarter. Yeah. Warren and I are a little older than some people. And
they're everybody.
And we're not the most flexible, probably, in the whole world. And of course, if something as extreme as this internet development happens and you don't catch it, why, other people are going to blow by you. And I don't mind not having caught Amazon early. The guy is kind of a miracle worker. It's very peculiar. I give myself a pass on that. But I feel like a horse's ass for not identifying Google better. I think Warren feels the same way.
Yeah.
We screwed up.
He's saying we blew it. And we did have some insights into that because we were using them at Geico and we were seeing the results produced, and we saw that we were paying $10 a click or whatever it might have been for something that had a marginal cost of them of exactly 0. And we saw it was working for us. So
we can see in our own operations how well that Google advertising was working. And we just sat there sucking our thumbs.
Right.
So we're ashamed. We atone. We're trying to atone. Maybe Apple was atonement.
When he says sucking our thumbs, I'm just glad he didn't use some other example.
Coke is a very, very powerful marketing organization. Sold 0.7 billion cases. There's nothing like it in the world, and I do not think they've lost their focus or drive in any way whatsoever.
Own 400 million shares of Coca-Cola stock, as you know. We've never sold a share, and I wouldn't think of selling a share. It's a little crazy. They've been selling Coke since 1886. They sold sell 1.9 billion 8-ounce servings a day. That's 693 billion servings a year of Coca-Cola products, one kind or another. Finally, I had a partner that straightened me out, and it told me that it was much better, as Butard quoted, to buy really wonderful businesses at a fair price instead of looking around for these things that had one puff left in them. And if you're looking for a wonderful business, it was hard to beat Coca-Cola. So that's why I'm here.
Thank you. You never would get in the food business, in my judgment, quite the inevitability that you would get in the soft drink business with a Coca-Cola. You'll never get it again in the soft drink business. I mean, it took 100, I guess, the 1886, so it'd be about 111 years to get to the point where they are. And the infrastructure is incredible. And so I wouldn't put it quite in the same class in terms of inevitability. That doesn't mean it can be a better stock investment depending on the price. But you're not going to get the price from me, and knowing Charlie, I doubt if you'll get the price from him, but we'll give him a chance. He's breathing, folks. He's breathing.
We've got this down to a routine. No, I have nothing to add, Warren.
Okay. I didn't have anything to say either. I just took longer.
I will tell you that all of the points you've made, I'm aware of, and I like our Apple holdings very much. I mean, it is our largest holdings. And actually, what hurts in the case of Apple is that the stock has gone up. And we'd much rather have the stock. And I'm not proposing anything be done about it, but we'd much rather have the stock at a lower price so we could buy more stock.
So the question is, 10 years from now, what place in the mind, because it's a share of mind, it's not, they call it share of market, but it starts with share of mind. And what place in the mind of billions of children around the world and their parents does Disney itself have, and their characters, relative to that owned by other organizations and other characters? And
the whole Walt Disney Company at that time was selling for $80 million with no debt. The Pirates ride was just about to be introduced at Disneyland. That was going to cost $17 million. So here was the stock selling at less than 5 times rides now. And Walt came in and he said, "Would you like to have lunch with me?" And it couldn't have been nicer. It was a great experience.
The management today, would he be proud of Bob Iger?
Bob Iger is a home run hitter. I mean, he is really, really good. And he's a great guy on top of that. No,
Well, why don't you own the stock now?
well, I made a terrible mistake.
You owned Disney once before and sold it. You also owned advertising companies in the 70s, I believe.
Right.
And you sold them. Could we have some insight into your thinking as to why you sold them?
I'm not sure I want to give you any insight into that thinking. Well, we'll start off with the fact that when I was 11, I bought some city service preferred at 38, and it went to 200, but I sold at 40. So, grabbing my $2 a share of profit. So everything we've ever sold has gone up subsequently, but some of them have gone up more painfully subsequently than others. And certainly the Disney sale in the 60s was a huge mistake. I should have been buying. I did forget about holding. And I wouldn't think of the credit card business as a one model business any more than I would think of the car business as essentially being one model. I mean, Ferrari is going to make a lot of money, but they're going to have just a portion of the market. Well, Amex is growing around the world with individuals, is growing around the world with small businesses. You just saw the contract they made with Delta, which is probably the ideal partner that runs, for 8 or 9, whatever it may be, 9 or 10 years actually. It's, the billings go up per capita, they go up, the coverage spreads, and they're going to have loads of competition, and they always will. But they had, that's something. J.P. Morgan, took on the Platinum card and was a competitor, and the Platinum card had highest renewal rates that they've had, and they increased the price, I think, from $450 to $550 during a competitive battle.
and retention improved, and new business improved, and 68% or so of the new business was millennials. I mean, it is not an identical product with anything else. And as a premium card, it has a clientele which is large. It may be X percent of the market, maybe 3/4 of X%, or whatever it may be. It isn't for the person that likes to have 5 cards and look every day at which one provides the most rewards that day, or in what gas stations or something of the sort. But it's got a very large constituency that has a renewal rate, a usage rate that's the envy of everybody else in the industry. So I like our American Express position very well. Charlie? Charlie, anything on American Express?
No, I think we own the world as long as the technology stays the same.
It's an interesting thing.
I have no opinion about technology.
This year, the technology is not the whole thing. I mean, fortunately, I mean, if you look at credit card usage, there are a lot of different things motivating different people to use various types of payment systems, and there's a lot of them that are growing. There's some of them that are marginal, and American Express is an extraordinary operation. And I think this year, our share of the earnings, well, by next year, our share of the earnings of American Express will be equal to the cost of our position. We'll be earning 100% on what that position cost us, and I think it will grow. And I think the number of shares will go down, and our interest will go up without us laying out a dime. So it's a.
As you say, we own the world if it doesn't change.
Well, even if it changes something, the world has changed a lot. American Express was formed in 1850.
No, I'm talking about WeChat.
Well, you can talk about all kinds of competitors. But,
Yeah.
but the American Express actually was an express company formed in 1850, like I say, by Wells and Fargo of all people. And for a while they carried these big trunks around of valuables, and then the railroads came along, and that wasn't going to work very well anymore, so they went to the traveler's checks, and it's a very interesting thing. In 1950, when I was living at 116th and Broadway, they were down at 65 Broadway, and they were the most important name in travel. They were synonymous with the integrity of their traveler's checks. And the whole company, in a record year for travel, earned $3 million. $3 million, what a bond trader earns now in my lifetime. That's what they've done with, and their hand going in was the traveler's check, which has more or less disappeared. But the American Express, the power of that brand, intelligently used going into the credit card business, where they entered much later than the Diners Club, later than Carte Blanche, but they came to dominate the luxury end of the credit card business. It's a fantastic story, and I'm glad we own 18% of it. Jeff, I've admired him for a long, long time, and watched what he was doing, but I did not think that he could succeed on the scale he has, and I certainly didn't even think about the possibility of doing anything with Amazon Web Services or the cloud. So if you'd asked me the chances that while he was building up the retail operation, that he would also be doing something that was disrupting the tech industry, that would have been a very, very long shot for me. And I've really underestimated the brilliance of the execution. I mean, it's one thing to dream about doing this stuff online, but it takes a lot of ability. And you can read his 1997 annual report, and he laid out a roadmap, and he's done it in spades. And if you haven't seen his interview on Charlie Rose 3 or 4 months ago, charlierose.com, go to and listen to it, because you'll learn a lot. At least I did. So I just plain, it always looked expensive, and I really never thought that he would be where he is today. I thought he was really brilliant, but I did not think he would be where he is today when I looked at it 3, 5, 8, 12 years ago, whenever it may have been.